So this is the first of its kind. This is our first position management class, and we're dissecting April 1st, Monday. So first of the month is lining up with the Monday this month. So we're gonna dive into price. I'm gonna shift this over. Let's go down to the 1 minute time frame. We're gonna go into the chart over here, and we're gonna see what's up. So basically, what this class is gonna be is I want you guys to ask questions. I want you guys to play devil's advocate and create scenarios that maybe you faced in the past or maybe you faced on the day. You guys already know, but I typically talk to a few of you guys after session on the daily basis. So depending on who I feel like needs me to talk to them, I'll reach out. And so I have 3 case studies from today. One of them is a 10K live account. One of them is a 3K live account, and one of them is gonna just say, let's just say it's a 100K funded challenge, fresh account. There hasn't been any losses on it. There hasn't been any gains. Moving forward in the upcoming weeks, we can dissect. We can have case studies where the account was down, and this is the day that I'm playing. How do we balance that out? And it's gonna be much more interactive in that sense, where you can literally contact me on that day and be like, hey, here was the situation, this is where I ended the day, how can I have created a better situation in order for me to achieve whatever it is that you wanted to achieve on the day. So what do we know about Monday? What's Monday typically? You guys can answer, don't be shy.
It's like liquidity building day, I guess.
Low risk. It's low risk Monday. That's my saying, right? Low risk Monday. So we have to, how we're gonna do the class is gonna be, okay, what day are we playing? What is the current market condition? And we're gonna go a little bit more in depth into that right now because we had Eric review it today, but we didn't do this right after. So let's review that for a second. So we know that on a higher time frame, 1 hour, we have quadruple lows down here, and then this is the retracement area. So automatically when Friday finished off without taking out Thursday low, I'm assuming that Monday or Sunday is gonna have a gap up because they want to drive prices higher. Now, looking at Dow Jones was telling me the same narrative because of the weekly candle closes. So you can see the previous weekly candle close is an up close candle. So I'm expecting them to do what? Run out buy side. They have to run out buy side on Dow before making any decision to move towards the downside. So you can see that today has opened, gapped up, right? Let's go on 1 hour. So Dow Jones creates a NWOG over here. So this is the NWOG created on Dow Jones for the week. Gaps up, pushes price up, takes out high during London session or Asian session, whatever it may have been. So I'm automatically, I know on the back of my head that Dow Jones has run out that high. So now it can flip if it wants to. Now, let's take a look at NASDAQ. NASDAQ, we have quadruple lows, pushed up, but we didn't run out these highs. But it's just quadruple divergence. It doesn't have to run out the highs. Where is the final TP level for divergence plays? Like, if it's not going to reverse price, if I'm not expecting a reversal in price, what's the max TP level that it should hit? The previous retracement point, right? Being right there. Look at that OB. That's OB right there. So if you mark that out, here, let me just mark it out so you have visual on it. OB. Where does it go? Goes right there, stops, comes down, has the dip down. This is what? Flip of market structure, return back, hits the bottom of OB one more time. So I know if it passes these highs right here, which was my purple box today, it's going to drive down to do what? Take out sell side. Take out sell side off the day and take out sell side to the left. It's the full model. The full 2022 model that Eric reviewed on session today. So coming in, looking at the 1 minute time frame, I see price is driving up. What's my direction? Am I long or short? I'm short. So I gotta wait until short starts setting up. So we jumped the gun a little bit too early today. We entered right here on this candle. We had stop above that candle, so we took that stop, right? So we're gonna go through this for each one of the accounts that we have. So we had a stop on the original position of 8 handles. Okay, that's 8 handle stop right there. So if I have an 8 handle stop right there, then guess what? Okay, I'm 8 handles down. Now let's take the first account. The first account is the 10K live account. It's Monday, low risk day. If I'm trading on a 10K live account and I'm coming in and I want to use low risk, and I know that it might be a little too soon, what position should I drop on this? Can somebody tell me? Hello?
1%.
Nope. Too
Can you
much.
repeat? I just joined.
Too much. So eight handle stop on a Monday, fresh 10K live account. I'm dropping 1% on this? No chance.
0.25. Maybe max
25. Let's just say $50.
Alright.
Okay? But if I were to run this in a contract position sense, then I'm not gonna run $50 because that would be what? On 8 handles, I would drop what here? 5 micros, right? But it might be too soon. So does that mean I drop 5 micros? No. You drop 3 micros. If you're dropping 3 micros, and if this is the spot, do you not think that somewhere here, if this were to drop from right here, it's going to give you another opportunity? Remember, the 2022 model is very specific. It's very specific. The 2022 model has something like this. So it does this, pushes up, breaks out, flip of market structure, comes back. Now on this leg, you get something like this here, right? Which is that. So let's say I'm entering here. 3 micros is going in here. You're telling me that I can't wait for this and add more here? Maybe I didn't want to risk 1% on that position. $50. Let's say 0.5%. I'm going to risk $50 on this position. And it's an 8 handle stop over here. Okay, if I'm taking this play and I have 3 right here, and then I want to add 2 more. On this side, it's going to give me an opportunity. Whether it was added here, whether it was added here, or it was added here, it doesn't matter. It's going to average out to this. So there's no reason to enter 5 right away right there. The guy that enters 5, he's FOMOing. He's FOMOing. That's why he enters 5 right there. So you add 3. So 3 micros, 0.2, 8 handle stop. How much did I lose? 3 times 8. $24 on the original position. Now, we take the second position. Second position is right here. It's on the screen. What's the stop? 12 handles. I took a 3 micro trade, $24 down, and I have a 12 handle stop. What am I taking on this next position?
2.
You can even take 3. You could take 2, you could take 3. No, absolutely not, Jackie. You don't double down on that. You don't double down on a losing trade. You could take 2 or you could take 3 again.
Oh,
If
no.
3 were to run, and I know that the take profit is 60 handles away, or even let's say 30 handles away. What's 2 times 30 handles? Money lost on 24 handle micro, brother.
Yeah, you forgot to times it by 2. That's why.
What are you talking about?
On the first trade on the 8 point hit, it's 3
Six.
micros times 2 for the leverage, so $6 per point, and then times 8, which would
Correct.
be
48. Okay, so we're down 48. Let's say 48. So now the second trade. We have 2 micros. 2 micros. If it were to run 30 handles, how much am I going to be up?
60.
$60. So is it going to balance out the $48?
On
Yes, it's going to
yeah,
balance out the $48. Okay? But it doesn't. It hits stop. So now I'm down 2 micros, 04, 12 handles. So $4, sorry, $4 times 12, 48 plus 48. I'm down $96. I'm down $96 on this move. Okay? So now, if I wanted to take it again over here, that trade that I threw on over here, how many handles is that stop? That stop was 6 handles. Okay, so you've lost $96. Keep that in mind. Let's open up a new one. I take it again at 2 micros, right? Which is $4 times 6. That's 24. 24 plus 96. You're down $120. Okay, now over here, when you see this and then this drops and you see this candle flipping, you know you're down close to 1% on the account. All right? But you know the move is setting up. It's right there in front of you. I gave you the confidence in it that this is going to be the play. It's going to get there 100%. It's just a matter of if it's going to get there in a direct shot or not. I literally talked about that. If you wanted to enter this next play with full confidence that it's going down there, how much am I risking on this next position?
it's a Monday, you're down already $120. If it goes all the way down there, I might risk 1, maybe 2 micros, limit the loss, but if it's gonna go down there, you're gonna make all your money back plus more.
Me personally, I'm looking at this trade that's in front of me right here, and I know in my gut that this is gonna go. I'd be willing to throw another 1% on this trade. Just this one. And this will be my final attempt. Which means I'm risking how much? 4 to 5 micros. Somewhere there. Right?
Roughly, yeah.
4 to
5.5.
5 micros?
Yeah, closer to 5.
Okay, so we're risking 5. If we put on 5 micros right here. Let's close this. Actually, we'll clear that one out. So we're going to throw 5 micros at this, and this one runs. And this one, the first TP that I called, I said if you didn't clear out and you're in a loss, you should take some out over here. Okay, you're up 30 handles on 5 micros. How much should I clear out if I'm in a loss of $120?
3.
2. Because you're in the move. You know you're in the move, right? I even said it. You're in the move. 2. If I clear out 2 at 30 handles, 4 times 30, $120. Guess what? I'm BE on the day. Right? Now the next one you cleared out on your 5 is down here, which is the next TP level that I called. 60 handles away. So now you're up, how much? 120. How many do you have left? You have 2 left. 2 left, that runs 110. So you're up 120, right? And you have another 4 that ran 440 plus 120, you get 560. How much did I make on my account on the day?
560. little over 5.5%.
Correct. That's scenario 1. That's case study number 1. Okay? Now let's talk about a little bit of a different situation. The account is not as large as 10K. It's a 3K live account. Okay, 3K live account. I come in here. What am I dropping on this position?
1 micro.
1 micro. So 1 micro, 8 handle stop, $16 hit. Correct?
Mm-hmm.
Okay, $16 hit right here. So you have a $16 hit on that 1 candle. Now the second candle, how much am I dropping?
1 micro.
$24 hit plus $16.
36.
$40 hit on 3K. Okay? And you have to accept this if you're playing on a smaller account. That you can't even look at this in a percentage. You got to look at this in a dollar figure. So $40 hit on a 3K account. Now, this next spot, 6 handle hit. How much am I dropping there? 1 plus 12, 52. I'm down $52. What am I dropping on this one?
2 micros.
3. You're dropping 3, or son. How am I dropping it? Is it all at once?
No, you're gonna scale it in.
Okay, how am I gonna scale it in? If you were to draw this out for me right here, how would you do it? So you have 1, let's say, that you put on at the spot. Where's the next one going in?
Halfway through that candle.
Halfway through the candle. Okay. The original stop that I had mapped out is here. When you click that button, where is that stop moving to?
The candle body, not that wick.
The candle body. This body?
Yeah, that's what I would think.
Yes. I would put it above this wick.
Mm.
Above the purple box. So you're closing in the stop as you're scaling in. Because you're anticipating that this is the move. Where does the third contract go in?
Once that next candle flips bear.
Bang. Where is the average price of these 3 positions right here?
The second entry, basically.
Right here. Correct? Okay. Now let's look at that. So this is the guy that's trading his 3K live. First TP, 25 handles away. He has 3 in. Should he take something off? He's down $52. How many does he take off?
1.
1. Which brings back how much on 25 handles?
$50.
25 times 2. $50. The guy's down $2. What does he do at this stage? The guy is down $2. What does he do at this stage? His new position is over here. Because now it's using the average price of these 2 positions, right? So this is the new position. What is this guy doing if he's down $52 and he just closed out 50?
BE.
No.
Oh, a little bit below BE.
Right here. To lock in the $2 plus the commission and fees. If this were to come back and tag him out, should he care?
No.
No. It's Monday. Doesn't matter. So it doesn't matter. But it doesn't come back and tag him out. It runs 60 handles. Should he clear one out right here where I called it?
Yes.
Okay. So let's say 50 handles, right? It's five handles less. So let's say 55 handles, he clears out one more. 55 handles, you clear out one more. So you're back at 50. So let's say minus 50. This is the profit loss total. So he's negative 2 right now. But this guy just cleared out 2 times 55, 110. Minus 110, he's positive 108. He runs the last micro until the TP down there. He makes the extra 108 plus 220. He's up 328 on the day. That guy has to clear out all of it. The 10K guy, he doesn't have to clear out all of it. He could leave one to run. This guy's account is too small for him to leave one to run. He can't afford it. He needs to clear out that $300. So now let's talk from a reality standpoint. We're going to use this guy. We're not going to use the 10K guy that made $500 on the day. $300 locked in 3 times a week. 3 times a week is $1,000 times 4 weeks. That's $4,000 a month. The other day I had someone text me saying if I can make $4,000 from trading in a month, that's beautiful. I just showed you how with 3 micros on the day you can manage to do something like that. Now all those positions that I call the hedges for and it runs and this and that, this guy would be closing out the full position, while the 10K guy, if he's on the CFD side, can hold a portion of that position that's lower down when he goes short. So he was long, he took his partials, now he goes short. And he catches another move there, locks in a partial on that. Does this make sense?
Yeah.
Let's discuss the third case study. Case study, 100K funded, starting off the bat. How do you run a challenge? Can somebody tell me? Arsen, you don't talk. I need somebody else.
Well, first you act like it's not 100K, it's actually 10K.
No. In reality, it's 3K. It's 3K. So the guy that started off with the 100K funded challenge, how much should he drop on this original move?
Three micros?
He could drop 3 micros. With the intention to add another 2 to 3. Okay? Where does the next 2 to 3 get added, John? If it doesn't touch stop here, when it breaks this low and starts chasing this purple box, he can add 2 to 3 right there, totaling him 5 to 6 in this area. Too early. Still too early. But he drops 3. So it's the same situation as the original guy. He drops 2 to 3. He gets stopped out. The next position right here, he drops another 2 to 3. He gets stopped out. This position over here, he might drop 5 and he takes the 6 handle hit. He might be down 170, 180. It's not doing substantial damage to the 3K margin that's available for the challenge. Now when he sees this, what does he drop right here?
10.
7 to 10. Because his initial investment is $150. It's not 3K. It's not 10K. It's $150. Now, does the guy clear out over here? Yeah, he could take a partial if he drops 7 right here. He could take 2 off right here, which will recover majority of the losses that he incurred before the play actually moved on. Which leaves him with 4. 4 runs, 110 handles. The guy locks in $400. That guy doesn't size up to minis until he's past 3 to 3.5. anywhere from 2.7 to 3.5, that guy can size up to a mini.
What do you
That guy
mean?
can drop, let's say-
1,000?
Huh?
You're saying 1,000?
On what? What?
Well, like you're saying when he could take a mini, when he goes up to 2.5, like he makes 2.5 grand. Is that what you mean?
Yep. If you want to play it very conservatively, to run it up, to build up to that level, to take that position, that's how you would play. Now, there's somebody that could be like, dude, I'm just willing to risk the $150. Like I'm willing to just risk $150 per day. That guy can play 8 micros right here on this position, and he could throw 1 mini. Or he could throw 5 micros and 1 mini, which would be a 0.3 lot. That 0.3 lot cleared out at 60 handles is going to make somewhere around $1,500. Let's say he locked in 3 bills over here, and then he kept his mini to run all the way until here. That's a $2,000 run over here. So the guy's up 2.5 on a 0.3. 2.2, let's say, with the losses that he incurred before. So what was important in today's lesson? In today's lesson, it was important to realize where to put on the real position. After it gave the confirmation, the return back, we're looking at this purple box that I talked about on session. We know we have inefficiencies left behind from market open, 1 minute FEG down here, NWAC from this week, sell side down below. We're tapping into this purple box as resistance. It's making higher highs and then drops off, and this is the flip. So when this candle flips over here, I'm calling short. Why? Because I'm anticipating the drive down. There's more favor to the downside than to the long side. Now you can't take this information and just use this information. This information is supposed to be paired with what Eric went through, with how I hosted session, with everything, and it needs to come together. That's the purpose of this class, is to bring everything together, to understand how you could have played it in order to have created a winning situation for your account. Now it's Monday. It's Monday. The 100K guy, even if he brought in 1 today, if he brought in 700, if he brought in 600, he's in a good situation. The 10K guy, in a very good situation. He's in profit on the week. He has profit to risk. He has margin on profit to risk. Not margin of initial deposit. Based off of how each individual played it and how they managed it and how much they locked in, determines how they play the next day. Any questions? No questions?
No, I'm all good.
Okay, sounds good. That's it. Catch you guys tomorrow on session. Tomorrow, let me check the calendar. Tomorrow I'll be on with Team Elite only. Anyone that texted me for the 3rd package, the middle package, you guys are free to join in tomorrow also. I'm gonna have that up on the website later on tonight, and I'll text you guys whenever I make the upgrade on your account. Other than that, enjoy your day, boys. Have a good dinner if you guys haven't already, and I will see you guys tomorrow.
Thanks,
Alright.
Ryan.
Thank you, Ryan.
Thanks, Ryan.
This was really
See you.
beneficial.
See you, bro.
See you guys.
Thank you, brother. Have a nice day.
Bye.